Welcome to FX Street. If you like what we're talking about, you like the content we are producing, head on over to YouTube, hit that subscribe button on our channel, and you can follow me individually at Just Analysis One. Taking a look here at Solana. Oh man, you want to talk about a major crypto that's had a beatdown? This one is one of them. It's really been hammered south. So you look at where are we at? Price measure. You go from the all-time high and you look at where it is now. From the all-time high back on was November 6th to where we are now. That's a 70% drop, and that's over a 110 days. That's a pretty fast slide south. But yesterday was pretty impressive. I mean, and this is something that happened across risk-on markets all around the globe. Like you got the Nasdaq down close to 4%, and then it rallied to a 2% in the green close. But Solana opened up, dropped down, a little bit over 11%, and then ultimately closed above by 5.5%. And then the size of that recovery from the low was quite substantial. You go from the low of the day to the close, that was almost a 20% rally. So, but here's the deal: it wasn't enough. It wasn't enough to put it above some key resistance levels ahead of it. So, the 50% fib retracement at 92, the 2022 volume point of control, they share that $92 to $93 level, and then you have the daily Tenkan-sen, which is the weakest level of the Ichimoku system, and despite that big rally yesterday off the lows, there's clear signs of it struggling to get higher. Now, Solana on the weekly chart, and there's a really nice reversal setup, low risk, high reward reversal setup here. It's a long-term swing trade, but you look at the weekly chart, and it's kind of in a danger zone, because below $76, the volume profile really doesn't get into any type of support until $50. So I mean, that's a sizable percentage drop. But when you look at it from this weekly chart perspective, you get kind of a different kind of view here. You do have some regular bullish divergence on the composite index. The relative strength index is still in a bull market. All right. It still shows support being held at the last oversold level of 40. And the Chiku span still above the candles. So it's still above the Ichimoku cloud on the weekly. So it still has a bullish slant despite how low it's fallen. So don't discount that. And the weekly candle itself, it closes like this. That's pretty close to that. Is that a dragonfly doji? A very, very strong bullish reversal candle. But all that said, it still has a long road ahead of it if it wants to recover. So upside potential going into here first off, here's the point figure setup. This is a really nice. So you have this double bottom followed by two O's below that double bottom. This is a bear trap. Actually, it's a form of a bear trap. Bear trap's only one O, but this is called a bearish fake out setup. And that it developed at the very bottom of this swing is a very, very positive sign. So the entry on this is at 97.5. It has a stop down at 85. And the horizontal profit target method, now this seems a little ridiculous when you look at it like this, but don't interpret this as saying, oh, well, the next column's going to hit there. No. This is definitely a trade where you practice some intra-position management, and you whatever capital you allot to your trades. This is one that, for me, what I do is let's say I spend $1,000 each trade. This is one where if the target's up here, yeah, I want to go there, but I'm going to take that $1,000, separate it into four $250 trades, and have some profit targets taken on the way up. Let the last quarter of that position, the last $250 position, just let it run. Put a 3-box, 2-box trail on it. Let it do its thing. But this type of swing here is really nice because primarily for two reasons. First, the entry would confirm the bearish fake out, but also its proximity of the entry to the red diagonal line here. This is the dominant bear market angle. We're not far away from being able to convert from a bear market on this point figure chart to a bull market. So just keep that in mind. But from an Ichimoku and a candlestick perspective, the upside potential going into the weekend likely going to be limited to that $100 region. That's where the bottom of the bull flag is at, prior bull flag, which is represented in light blue linear regression channel. That's where the bottom of that bull flag is at. The bottom of the Ichimoku cloud is in that $100, $105 region. You also have the 50% fib retracement just above that at 110. So just a large cluster of resistance, really preventing a huge spike up. And as far as downside risks are concerned, yeah, they're substantial. The next high volume node on the daily chart doesn't show up until that $75 level. You also, below that, you get into the high 60s, near 70, 60, 200% fib expansion at 66, the 618 expansion at 61, 68. Yeah, it's just a lot of I'm losing my words today. It's like a Monday and it's Friday, but those should be the ranges that it's limited to. So we'll keep an eye on it, update it as needed, see what this looks like by the time we revisit it on Tuesday. From all of us here at FX Street, thank you so much for watching. Stay safe, and please don't forget to like, comment, and subscribe.